you end up in a world where Chainlink becomes not only the transactional standard and data standard of DeFi, but it's the transactional and data standard of capital markets. And then once again, our goal is to be the transactional standard in both places, so that when they do go to transact with each other, that it's a seamless transition. It's not that one group is on one system, another group's on another system, and them both being on the same standard actually benefits everybody because they both have to do much less work.
Welcome to the Encrypted podcast, your gateway to the future of technology and innovation, right here in the heart of Dubai's dynamic tech universe. I'm your host, Maria Vovchok, and together with Dubai Blockchain Center, we are embarking on a journey that unravels the minds of tech visionaries through the digital frontiers that are shaping our world. Hello and welcome everyone to Encrypted Podcast. I'm your host Maria Vovchok, and today we're really happy to have here Sergey Nazarov, who is a co-founder of Chainlink, the industry standard technology platform for on-chain data, cross-chain interoperability, and blockchain abstraction, contributing to building the industry standard Oracle solution used by leading banks, insurance companies, and large technology firms. Has given Nazarov a unique perspective on what is required to drive the mainstream adoption of blockchain technology and build a world based on cryptographic truth. He was named most influential in Web3 in 2019 and again in 2023 by the crypto media CoinDesk. Sergey, welcome to Encrypted. How are you today?
I'm great. Thank you for having me.
Thank you. What else do you believe our audience should know about you that I haven't mentioned yet?
Well, if they're crypto enthusiasts interested in Chainlink, I would tell them that they're looking at the right class of technology in the form of Oracle networks, because Oracle networks solve a lot of the problems around assets, financial products, and transactions in ways that blockchains and other technologies don't. And actually, the more advanced smart contracts become, the more they need Oracle networks, and a greater and greater role will be played by Oracle networks. For example, if you need identity, Oracle networks will provide that. If you want to connect smart contracts to AI, Oracle networks will provide that. So the more advanced a smart contract becomes, beyond just the creation of a token that is not connected to anything, the more Oracle networks become important. So if that's the group we're talking about, that's what I would say to them.
When we would look at Chainlink, let's say from the beginning of its inception and throughout the years, like how it was actually progressing, can you please tell us about this journey from inception to the current role in enabling cross-chain interoperability?
Sure. So I got into what was called the Bitcoin industry in 2010. So the only thing that existed was Bitcoin. So it was the Bitcoin industry. And Bitcoin was viewed very negatively because the main thing people understood about Bitcoin was that it was related to dark markets and Silk Road and all this stuff. And blockchain technology wasn't really a concept. And then around 2012, 13, 14, blockchain technology started evolving as a concept beyond Bitcoin. And so I built, together with some other great people, some of the first, what were called dApps, decentralized apps back then. Basically from there, I learned a lot of the problems that smart contracts have, even before Ethereum was a white paper or before it existed. And the set of problems then evolved, and Ethereum did a very good job at making a blockchain with programmable smart contract code in terms of the on-chain code. But we had built a solution within something called smartcontract.com that was a full stack solution, which meant that it had a smart contract on-chain component and it had many off-chain components. And because Ethereum did such a good job in creating a very good on-chain component, instead of deciding to compete with it, which is what a lot of people from that vintage of people in our industry decided to do, a lot of people decided, I'm going to compete with Ethereum, I'm going to kill Ethereum, I'm going to make
Ethereum killers.
The Ethereum alternative. We kind of were positive on Ethereum, and we thought well of the team there, and we thought well of their progress and well of the patterns that they created, and we found them very useful. So we just decided to go in a different direction of focusing on the off-chain components, right? And those off-chain components were initially very not understood. So I remember when I would explain what oracles are to people, they would ask, like, the most common question was, you mean the company? Like Oracle, the company? I'd be like, no, not Oracle, the company, but this whole set of technologies. And then over the years, as we invented and launched something called Decentralized Oracle Networks, which is the decentralized version of Oracles, we were able to find a few use cases and markets, specifically DeFi, where we were able to feed price data into contracts as the first use case of Chainlink and Decentralized Oracle Networks. And that price data was immune to manipulation to a similar degree as the smart contract itself. And so DeFi was really the first widely used advanced smart contract that wasn't just about an on-chain piece of code, but was about an on-chain piece of code that interacted with an off-chain piece of code, namely price. And so Chainlink became the predominant and is still the predominant way to provide price data into contracts. But then Chainlink evolved well beyond that. But to answer your question, it came out of our experience building some of the first smart contracts ever, and then eventually building more and more advanced ones. Because from our point of view, smart contracts were always something that would be connected to the real world, not just a tokenization engine without a connection to the real world. And that is the foundational idea, I think, behind my work and Oracle Networks and Chainlink.
So actually, I remember about when for the first time I heard about oracles, and in this case, when I heard specifically about Chainlink. So you were, in this case, if I'm not mistaken, you were the first one who saw this problem, or did you have at the same time some competitors who also saw the issue that, for example, we need to bring, let's say, some off-chain data on-chain, and this is what we can do with the help of oracles?
So I find when you make systems designs, one or two key decisions make a very big difference. And there were one or two other teams that were trying to make centralized oracles that they provided in a software as a service model, where their view was that they would run the oracle for the smart contract themselves. So they would operate it themselves as a company and provide it in this software as a service model, where now everyone has to trust their server run by their company in this centralized way. And we looked at that model, and we basically decided that it was the wrong model, because the smart contracts were decentralized, and connecting them to a centralized resource, at least in the Web3 public chain world, would massively reduce its key properties. Manipulation resistance, reliability, a whole bunch of other key properties. So instead of building a service that simply created a centralized server and provided a software as a service kind of middleware solution that said, you'll pay me something for me to send some data to you through my server that I run in my company. Instead of going that route, we decided to go the open source, decentralized global standards route and generate a system together with really smart folks like Ari Jules, who was at that point an advisor of ours. He was one of the 3 co-authors on the initial Chainlink white paper with my co-founder, Steve, both really great people. And with Steve's help and Ari's help, we were able to create a decentralized model where the role of an oracle was no longer a single server run by a company, but it was a collection of nodes that come to consensus, similarly to how blockchains come to consensus. But these nodes come to consensus about external things, not internal blockchain things. So the blockchain nodes and the blockchain network with multiple independent nodes comes to consensus about how to package transactions into blocks under a specific protocol for what transactions can and can't happen. Right? Bitcoin has one protocol of how transactions can happen. Ethereum is another protocol, but it's basically packaging transactions into blocks. And in inventing decentralized oracle networks, which is basically what Chainlink invented, we created a way for multiple independent nodes to come to consensus about verifying these external inputs and verifying commands for external outputs, and now also verifying events between chains in a way that multiple independent nodes do that without reliance on any one of those nodes.
So, for example, one of the nodes, like with Bitcoin, is out of order, then the other one can just pick it up and they can still provide the data that is needed for an on-chain data to be verified.
Yeah, that's right. But there's also one important nuance. This is another second very big design decision. Like when you make these system designs, a lot of smart people get together and you basically start gathering around a few key decisions. And if you make the right system design decisions, the system does something unique. And if you make the wrong system design decisions, then the system has a lot of bottlenecks or issues, security risks or any other set of issues. So one of the other big decisions was that we're not going to make a single network. So there is no one Chainlink network where everything is processed by a single set of nodes, similar to a blockchain. Actually, we ended up being able to launch thousands of Chainlink networks, individual networks, some of them on staging, some of them on testnets. We at some point reached over 1,000 Chainlink networks on production, connected to real value. And that's actually pretty significant because if you look at the amount of times that blockchains have been able to replicate themselves as L2s or L3s, you're like in the double digits. Like the most replicas that most blockchains have done on production in the L2, L3 model, it's in the double digits in any family of chains. And we already were at 1,000 Oracle networks before L2 technology was even live or something around that time. And the other big design decision is that Oracle networks are individual microservices. So you can generate an individual Chainlink Oracle network for a very specific purpose, like delivering of one price, or generating NAV data for a tokenized fund, or verifying identity, or creating a cross-chain connection, or doing a specific automation, or connecting you to a specific AI model. And so this design decision in this kind of service-oriented architecture model was also, I think, a very good one because it allows the Oracle networks to scale.
Yes.
And you can actually have multiple Oracle networks on multiple topics interconnected around a contract. So the contract becomes like the key conditions or the key mechanism for transparency or the key mechanism for ownership in this kind of unified advanced smart contract. And then the Oracle networks are services. So just like in Web 2, you basically have a core piece of code, and then you have external services. Like when you build Uber, you basically write the core Uber code, then you connect it to something like Twilio to text message with the user and the driver. You connect it to the Google Maps API to know the geolocation of both parties. And you connect it to something like Stripe to pay the driver. And only then do you build Uber. So you have core code, which in this world is smart contracts, and then you have services. And Chainlink is now basically that universe of services, whether it's price services, reference data services, identity services, off-chain compute services, cross-chain connectivity services, AI-related services. All of those things are basically what Chainlink has evolved into.
Dubai, home for innovations. What I really found really interesting as well was last year's announcements, because for me it was interesting that, first of all, you announced Cross-Chain Interoperability Protocol, CCIP, that connecting blockchains to bank chains, and it went live. At that time, I was really interested how it will work, because for the first time ever, by the way, you announced your cooperation with Swift. So this is interesting to see how banks and, let's say, decentralized companies are going to work together, and how you're going to provide the data, let's say, as well, from banks to blockchains, the ones they want to work with DeFi companies. Can you please tell us about, first of all, Cross-Chain Interoperability Protocol, and secondly, about your cooperation with Swift?
Sure. So Swift, actually, this was the second announcement we made. We've been working with Swift for over 7 years.
Really? So it was not exactly announced like...
No, this was the second one. Usually it takes a few implementations to move ahead with someone of Swift size. So this was the second one. The first one, I think, the first thing we announced with them, I think, was in like 2016 or 17, and we were working with them before then to get to even that body of work being announced. So while Chainlink has been working on solving public blockchain problems, we've also always in the background been working with some of the biggest financial market and market infrastructures and banks in the world. Everyone can look at our reports and they can see the names in the reports. In the Swift report, for example, they named the DTCC. I think Citi is in there. There's a whole bunch of, there's over 12 participants in that most recent announcement. But I think I can only mention the people that have been announced already through some of the work we've done. But people should look at that list. It's really a list of the biggest market infrastructures in the world and a list of the top global banks in the world. So those people have already been announced in some way in collaborating with us in some of these models. But the thinking about working with Swift is how to make the existing infrastructure of the banking system compatible with blockchains so that the users of that banking infrastructure can very efficiently migrate their value onto blockchains, initially onto their own private chains, and eventually all of that value on private chains will interact with the public chains. Mm-hmm. And I think people are starting to realize the significance of the capital markets as a source of usership for public chains. This is now just beginning to happen at the extremely early stages in extremely small amounts relative to the market size of capital markets through the Bitcoin ETFs. Mm-hmm. So 2 months before the Bitcoin ETFs, if you ask the average crypto community member who is BlackRock, the 20 or 30, maybe 20% of people who even know what it is, 90% of them would say that's the man. I don't like the man. We're going to destroy the man, and that's it. Fight the man all the way, all day long, right? Mm-hmm. 2 months after the BlackRock ETF for Bitcoin goes live, you ask people in the crypto community, who is BlackRock, 90% of them know, and 90% of them say, what a great group of people. Let me tell you more about Larry Fink, right? So basically, that is a very small version of what's to come. Mm-hmm. And it's because people fundamentally understand that the economics really very much put it in favor for the capital markets to use public chains. Mm-hmm. So the work with Swift is a part of a body of work with Swift and with other market infrastructures and standards that will allow banks to very rapidly go on chain through their use of Chainlink and CCIP. Mm-hmm. And the work with banks that's been progressing in parallel between our work on Web3 and our work with the capital markets has basically been focused on two things, and now we're adding a third dimension. The first thing that it's been focused on is the problem of data transmission. So the problem of data transmission is basically what allowed DeFi to emerge. So when Chainlink Oracle Networks launched, DeFi was a sub 100 million industry with 10 to 15 total protocols that were trying to solve this Oracle problem, and we're being offered solutions like, we'll run that centralized Oracle and we'll sell you SaaS access. Mm-hmm. And that did not meet their requirements. And therefore, they weren't able to launch in ways that allowed people to put any really significant value into their systems. So we already have the experience of having reliable data convert a set of applications that don't work into a set of applications that do work. And real-world assets is a good example of this. So real-world assets basically heavily depend on the ability to receive data from the real world about the underlying assets. Mm-hmm. Because the real world asset trend is really fundamentally different from just cryptocurrency tokenization. Cryptocurrency tokenization is, I'm going to make up a coin and I'm not going to tie it to an underlying asset. I'm just going to say that a coin exists and that's it. But real world assets are often tied to things. Now there are real world assets in the public chain market. There's gold, there's stable coins, certain utility tokens have a relationship back to the system that they are connected to. Mm-hmm. And so there is a class of that. But in the banking sector, to make real world assets, you actually need even more data than you need in DeFi, because to make an asset work in the traditional system, you need not only price, but you need certain data to comply with accounting requirements like NAV. And then you need additional data like identity data to allow the asset to even move. Mm-hmm. So the amount of data that you need in capital markets is significantly larger. Now, after solving the data problem for these banks, big asset managers, financial market infrastructures, so they could even form the assets, then we offered them cross-chain connectivity. And that's become a deep necessity for them, because like a critical necessity, because they now have shifted from a model of everyone is going to go on one chain, and we're going to get native interoperability by HSBC and Citi and Goldman all having addresses on one chain. That was the model for enterprise blockchains maybe 4 years ago. Mm-hmm. And since then, partly because the cost of generating blockchains has massively depressed down, and partly because they basically, in many cases, need to run their own chain, everyone is now launching their own chain. There are already multiple production chains for companies like JP Morgan, Standard Chartered, and others. And every bank that we talk to is launching a chain, but realistically, every bank will run multiple chains. for different topics, different reasons, different specific purposes, similarly to how they run multiple different databases within that bank. So now you're in a world where firms are generating on-chain assets and they need to connect to other chains that have forms of payment, have ways for payment to reach the asset in exchange. That's basically liquidity. That's a liquidity problem. So the ability to connect across chains and to connect those chains to the asset, to the chain where the asset is basically a problem around how do I transact at all. So now we've solved the data problem for them. We've solved the cross-chain problem for them. Because Chainlink is the only system that solves the data and the cross-chain problem. We can solve a third problem of basically being in synchronicity, where once I generate an asset that relies on data, and then I move it from the place where it was generated, so I move it from blockchain A to blockchain B, there's a fundamental question of how does data continue to reach that asset in this other place where it was moved. We're pretty much the only ones really solving that problem from what I can tell, because the alternatives are just a data system or just a cross-chain system. And then that's not even the third problem. That's a part of the first and the second problem interacting. The third problem that we solve for banks and asset managers is actually compliance. So we solve the problem of allowing transactions to move across chains and sometimes even move within chains in a compliant way. And compliance on chain basically boils down to writing data about compliance into an asset, like identity data is a good example. So writing identity data into the asset and then verifying that that identity data meets compliance requirements. And so the writing in happens from the data side of Chainlink, and the verification of compliance happens through the risk management network, which is a part of CCIP, which is another example of a very principled design decision, where we built a part of the cross-chain system that very specifically verifies things about transactions before they can continue. So it doesn't just verify that someone wants to do the transaction, that the transaction can happen. It can make the transactions happening conditional on things like identity, various legal requirements, blockchain reliability risks, rate limiting conditions, a big set of conditions. So basically where we've arrived with the capital markets is Chainlink is a platform that can solve their problem end to end. We can help them form the asset. We can help them move the asset. We can help them make the asset compliant. And then in addition to those three things, through the work with Swift and other global standards, we are able to allow their interaction for all of those things, both the creation of the asset, the movement of the asset, the compliance of the asset, in a way that is efficient for their systems. And efficient integration and efficient interaction is actually probably the main question for their ability to scale and really put large percentages of the value in their current systems on chain. Because if they want to put trillions of dollars on chain as a single entity, they won't be able to do it through their POC constructions, where one or two people do it through a private key. They will have to bring along the entire bank. They will have to bring along the risks team, the accounting team, all of the teams. And all of those teams are sitting on legacy existing infrastructure. And so the only way they're going to get brought along is if that infrastructure can read, write, and deal with blockchains. And the simplest way to do that is to put an abstraction layer between the bank infrastructure and the blockchains, which not surprisingly is called the blockchain abstraction layer. So CCIP has a part of it called the blockchain abstraction layer. We like very literal naming, Chainlink, blockchain abstraction layer. So it's very, very literal the way we work here. And the blockchain abstraction layer is an example of another principled design decision, where instead of throwing over the problem of how bank systems interact with chains, we've created an abstraction. So chains that banks launch and chains that banks need to connect to from other banks can now be interacted with through one interface, which will massively reduce their cost. So the thing we really need to get banks to in our industry is the cost of dealing with blockchains and transacting on chains, including their own private chains and across chains, is sufficiently low so that as the value of doing it goes up, the intersection of the cost and the value happens sooner. And the sooner it happens, the more value goes on chain. And then the more value goes on private chains. Once it's in that private chain format, it's now in a format where it's going to very easily interact with public chains. And if the public blockchains are running on the Chainlink standards for price, for connectivity, and the private bank chains are running on the same standards for price and connectivity, then their ability to interact is basically baked into that. So the first step of the plan is be the standard for Web3 and blockchains. We power the majority of DeFi. We power the majority of data going into chains, so we're the standard there. The second part of the plan is get capital markets to adopt the same standard for data, identity, connectivity, compliance, and so on. And then if they both are on the same standard for how to define price between each other, define connectivity between each other, once the legal barrier between these two worlds goes down, my view is that they will merge into a single internet of contracts. So into a single global internet of DeFi applications, regulated and unregulated, and bank applications, just like the internet is a connection of all the applications on one internet. So actually, if you really look at what we're doing with them, we're actually trying to get everybody into a single internet of contracts where they can agree on how to transact against the price, the various other data needed to transact, the identity data needed to comply, and the connectivity standards needed to reliably and securely transact across chains and across DeFi and banks.
Amazing. Actually, you mentioned also about tokenized real-world assets. So in this case, I wanted to ask you, because you actually issued a really interesting report, industry report on the topic with contributions from BCG, 21 shares, Paxos, and Backed. Can you please share with our audience who hasn't read it, can you please share the main takeaways from that report?
Well, the reason to read that report and really start looking into real-world assets generally is because cryptocurrency tokenization is the tokenization of things that are not always backed by underlying things. There's a percentage of cryptocurrencies that are, gold-based, cash-based, in stablecoin form, or some utility tokens that are connected to real usage and real value and real systems providing real security. All of the assets in the world. So if we look at the cryptocurrency industry without real-world assets, I think it's maybe something like 10 trillion. If you look at the real-world asset industry, it's actually 400 to 500 trillion. So the real-world asset industry is the rest of the world's value. Real estate, equity, commodities, insurance, global shipping, supply chains, all of that stuff being reformatted into the blockchain format. And the pattern for our industry is that as value gets reformatted, as value gets placed into the blockchain format, it then begins to transact with the other value in the blockchain format. So this means that the more value there is in the blockchain format, the more capacity there is for valuable transaction across all this different value, right? Like you can have a stable coin and someone can have a piece of real estate and you can transact in that, and then you can resell the real estate coin and buy a carbon credit coin. And I know it has the word coin. So when it has the word coin, it doesn't sound as serious. It sounds like the coins of crypto world, but it is actually semantically not representative of what the truth is. The truth is that real world assets are the migration of all the world's value, non-speculative value, real underlying value, all the gold, all the real estate, all the equity, all the commodities, all the supply chain refactoring invoices, all of this migrating into the blockchain format. So it is basically the question of, will our industry become the way that all value is issued, managed, and transacted? My view on that is yes. My view of that is that over the next 2 decades, hundreds of trillions, all the world's value will eventually be in the blockchain format, and new value will be issued and created in the blockchain format because it's a fundamentally superior format for how to issue, manage, and transact value and create relationships around that value in ways that don't rely on the legal system and in ways that are much more guaranteed and reliable. So the first reason people should read the report and just generally look into real world assets is that the name is not suggestive of the size of the opportunity. And that is known as a valuable secret. So that's something people should seriously understand. In terms of what I've understood from my work on RWAs and my conversations with banks and DeFi firms, I found that basically the value falls into a few different categories. The first piece of value is collateral management, is the ability for you and me to send value to each other. Like, let's say it's $100 billion. If that takes 3 days today, I can't earn interest on that for 3 days. Not earning 5% on $100 billion for 3 days is actually a lot of money. So the tokenization of value allows the efficiency of how it is transacted, owned, stored, reconciled, to eliminate periods of time that are very costly. They're not costly from an inconvenience point of view. They're costly from a hundreds of millions of dollars point of view. So as everything becomes tokenized, collateral, money markets, treasuries, everything. That's the first category of the RWA opportunity. The second category of the RWA opportunity is net new issuances. So the ability to own things on a fractional basis that were not ownable before. So for example, this building. We can't buy a piece of this building right now. We can't do that. But if we can fractionally divide up the building and we can fractionally give me a token and you a token, now we can own this building fractionally. And there's a lot of things like that. Real estate, carbon credits, private equity funds. And the person who owns this building and the person who owns the private equity fund and the person who's generating the carbon credit is seeking liquidity. So they actually want to make it fractionally ownable so that people can buy it. And so there's a lot of value in that. And that's like a net new opportunity. And this in the traditional capital markets world is commonly called by them the assets at the edges. So this is a whole bunch of assets that currently are not purchasable, not transferable, not ownable, not liquid, that you can't access. That I would say is the second reason. The first reason is much more interesting to people that actually work in capital markets and that deal with the back-end issues of collateral management, transaction settlement, payment timelines, and what that means for earning interest. Those are esoteric kind of back office, payment system, or asset management questions that, due to the size of those industries, are very, very valuable. The other category of questions is the one more interested to the Web3 community, because it's something they can participate by generating those assets. The question is, how will they generate those assets to a level that makes them as attractive or more attractive than the traditional systems assets? That's the real question. How does somebody generate a tokenized money market fund, tokenized piece of real estate, tokenized private equity, tokenized bond, in a way that that tokenized ownership, that tokenized financial product is at parity or much better than the asset generated in the traditional capital markets? And that's the question we're working on with a lot of these top banks, asset managers, and so on. And we have basically the capability to allow them to do that. A part of that answer is the ability to put data about the asset into the asset itself. So part of that answer is, in the traditional system, value and data are two separate worlds. So if I transfer an ownership receipt of something to you, or you transfer an ownership receipt to someone else, the only thing they get is a claim, an economic claim to ownership or an economic benefit. They don't, and then it's their responsibility to learn about that thing, to go find the data. The way that real world assets can be constructed, and the way that we help banks and asset managers construct them, is that we create what's called a unified golden record. So unified golden record is a data container, smart contract, that has the ownership rights within it, but then it also has fields for various key pieces of data. For example, for tokenized real estate, it would be, is there any new debt on that real estate? For a carbon credit, is the carbon credit still valid and redeemable, or has it been redeemed? For a tokenized fund, it would be the NAV valuation of the fund. So these are critical pieces of data that inform the holder about the quality and the status of the underlying asset in a way that manages risk in a very improved way. And so this is the way that we help create better real-world assets, and in the way that I feel that they will end up being a much better format for value, because when you receive a correctly formed real-world asset as a well-made unified golden record, you're getting ownership rights, and you're getting something that is proactively connected to all the data that informs you about the status and quality of the asset without you having to learn those things. So you can buy a carbon credit and know what's going on with a carbon credit without having data subscriptions about carbon credits or understanding carbon credits or knowing how to find that out. Usually this data would be housed in very specific places and available to a select few groups like bankers, investment bankers. And this is where they sometimes extract a big advantage over the consumer or even the institutional market that they sell those assets to. So that advantage, I feel, isn't right. I feel it should work in a way that the asset that you and me hold and that someone else is wanting to buy from us informs everybody about what is going on with it at that second in time, and it informs them to the same level as the issuer. So there is no information asymmetry between the people that know a lot about carbon credits and the people who are seeking to buy carbon credits. There's no information asymmetry between the issuer of the real estate token and the purchaser or holder of the real estate token. If there's a new tax obligation or debt obligation, the real estate token should know that, not based on an annual audit, but on a second-by-second basis. Basically, everybody should be learning about the asset from this unified golden record. And then we solve a lot of other problems with cross-chain compliance and all those things.
By the way, it's a very good thing that you mentioned. It's like they say in the future, you'll be using blockchain without knowing that it is blockchain. Like you'll be, like we are using today, internet, as they call it, Web2 internet. We don't exactly think what is happening in the background. So actually, one of the things that I also wanted to touch base upon is you mentioned earlier about Bitcoin ETFs. And one of the interesting things that for me was also, I was curious to find out that Chainlink Proof of Reserves is working with ARK Invest and 21 Shares. You mentioned also about asset managers of Bitcoin ETF to prove that ETF is backed by the correct amount of Bitcoin. So how do you see the capital market products utilizing Proof of Reserve in the future?
Well, first of all, Chainlink is the biggest provider of proof of reserves. And it's something that's been live in production for over 3 years. And I would say we power the most stablecoin, gold coins, and other types of real-world assets with proof of reserves. Proof of reserves is really just the very beginning of a whole class of data that's going to prove things about the asset. So in this case, proof of reserves is proving that a financial product in the traditional system is backed by the correct amount of assets in the crypto system. So it's a very minimal initial use case. But realistically, what proof of reserves is becoming already is proof of anything and everything that an asset issuer would want to communicate to a buyer, and everything and anything that a buyer would want to know about an asset. So proof of reserves would actually be the system that puts the data in that I was just talking about in the unified golden record model, where it can be proof of carbon credit redeemability. It can be proof of tax obligations on real estate. It can be proof of debt obligations on real estate. Basically take any dimension of an asset's risk or an asset's ability or inability to be valuable, write proof of in front of that, and that's what it does. So if there's something about an asset that's concerning to you, has this asset lost value? Has it, and can it lose value? Can it change? So proof of reserve is a very basic initial implementation of this direction, and we've already implemented proof of other things for multiple systems. But the reason it's called proof of reserves is it comes out of these earlier stages of the crypto industry, where it was used mainly to prove the assets backing a stablecoin or prove the assets backing a gold coin. So that's why it's called reserves, proof of reserves, because the initial use case of proof of reserves was proving that there are indeed underlying assets behind the coin. And then the interesting way that it started to get used was that not only would it be used as a transparency mechanism to prove to people that the underlying assets exist to back their unit of coin, but actually it was then used as a security mechanism by the minting function of that coin, so that you actually can't mint more coins unless the proof of reserve system confirms that there's enough value in the bank account or enough value in the gold vault to allow the minting of that additional amount of coins. So this is an example where this additional data isn't just used for transparency. It's where it starts to feed into creating various guarantees about assets. And those guarantees then make the assets superior, and those superior assets then compete with traditional assets that don't have those guarantees, and that induces everybody to transmit and migrate their value into the superior format. So proof of reserves is in the early stages still, in my opinion, as a way to solve a lot of these problems. But the work with 21 Shares, and Ark and Kathy Wood and those great folks is an example of how it's not just useful to the crypto community, it's also useful to the traditional financial community. And I think the traditional financial community is actually very sensitive to risk management because their job is generating yield and reward against managing down risk. And so my experience with the traditional community, traditional capital markets community, is that the better you can help them manage risk, the more they are happy about that. To a degree that is greater than the DeFi community, actually. So I view that proof of reserves will be getting pretty widely adopted in the traditional cap markets community. And that's one of the other big advantages that Chainlink has, is that because it does data, connectivity, and compliance, we can start working with a bank or an asset manager just on this one piece of data. And then once they see that it works and provides a lot of value to them, we learn their roadmap, and our community and everyone can work with them to implement the next stages of their development. And the next stages will require cross-chain, will require compliance, will require identity data, will require price, will require NAV, will require all these things. So proof of reserves is one of the key things feeding into that unified golden record model that I mentioned.
Encrypted is your exclusive ticket to the epicenter of technological innovations in the MENA region. Actually, apart from, you mentioned, and we spoke a lot about asset managers and banks, among traditional financial institutions, apart from these two, when we're talking about the others, what obstacles do you see when you speak to them? What obstacles do they see, and why they're so still afraid to use blockchain technology?
So everyone's primary problem in the traditional capital markets with engaging in on-chain activity more is basically legal clarity. So they have a strong profit motive to do it, and the technology has very large benefits for the collateral management piece I mentioned and for the new assets and so on. But it doesn't look like something that's possible for them to use unless there's a certain amount of legal clarity for whether they can use it. And different places in the world have very different views on this. So places like the Emirates and Singapore and Hong Kong are very progressive because they want to encourage digital assets to be formed, issued, transacted to and from their geographies as digital asset hubs. Other geographies that have had bad experiences with failures like Terra and FTX have taken a consumer protectionist view where they have gone cold on any crypto blockchain stuff, and then that has, by osmosis, affected the banks in those geographies. So the real answer to your question is banks are sensitive to compliance. They're sensitive to that for very good reasons because they depend on it to function. And if they don't meet those requirements, they pay billions in penalties, and they have all these big problems. So they're very, very sensitive to that. And now the good news is that problem is now being solved. So a number of jurisdictions are coming out with clarity about how stablecoins work, how digital assets can be issued, how real-world assets can work, how they can be transacted, what identity requirements apply to those transactions, and so on. And this is one of the reasons that I'm in Dubai, why I was in Hong Kong before this, why I was in Singapore before that, why I was in Sydney before that, why I was in London before that. It's because I'm actually meeting with a lot of these folks at the central bank level, the clearing and settlement system level, the market infrastructure level, and at the senior kind of top tier bank level to really get clarity on what are those conditions for transactions. And I've been having those conversations with those categories of folks for the last few years, and we're approaching a usable level of clarity. So we're now approaching a level of clarity that can allow an asset to be formed, a transaction to happen. That wasn't true 2 years ago. So that's the good news. So the problem is there, but the problem is getting solved. And our role in solving that problem is taking that new clarity, that new legal clarity about how transactions work, and packaging it into a technical solution that can allow those transactions to happen technically, which is what one of the things we fundamentally will solve for and are solving for the banks and the large asset managers of the world. So the thing that's the thing keeping them back, but the good news is that is gradually but actively really now becoming resolved. at least in certain specific jurisdictions that want digital assets as a part of their economy and view it as important. That is a significant improvement from, like, say, 2 years ago, and even 1.5, maybe even 1 year ago, depending on the place. And I think that's going to accelerate, because those places are then going to compete with each other for the greatest degree of clarity that will attract the greatest amount of assets, the greatest amount of stable coins. And as transactions begin to happen, they will compete even more. So I think it'll happen. It's been happening very slowly, and then it'll happen quickly all at once. That's kind of my view on how that problem will be resolved. The reason that they would want to do all this stuff is, the two reasons I mentioned before: the collateral management, transactional efficiency, atomic settlement, 24/7, 365 dimension of how markets and transactions and assets work. And then the other reason is generating new assets, which is fundamentally what banks do. So banks make their money on generating new financial products that they're able to sell into big markets that buy larger and larger amounts of those products. So this is really the thing that I feel is the basic profit motive behind this. And from the digital assets, the real world assets that the banks have generated, the calls, they basically do phone calls for these kind of primary issuances and other types of transactions, where they invite a bunch of people to bid or decide to buy the digital asset. And usually these calls for traditional assets, like a traditional green bond, would have 20 or 30 people on it. I know for a fact that the calls that are for the digital asset green things, green bonds or green carbon credits, have 100 to 150 people on them. So it's multiples of interest from a traditional financial product. And they see that. And this is why they have invested in creating digital asset teams. So 2 years ago, with the exception of a handful of big banks, I would have been speaking with the innovation group, which are mainly imparted with a goal and the priority of experimentation, not of implementation into production. Now, my conversations are like 90% almost exclusively with digital asset people. So people that are committed, their salary, their goals, their KPIs, there's a whole department: digital asset tech lead, digital asset product manager, managing director of digital assets. And so now the banks have seen this demand, and they've already made the investment. So that's one of the most hopeful signs, is that they've made the investment in terms of people and a budget to generate these assets, generate these technical developments. And, so we're working with those people. The legal clarity is on the way. Now we're kind of in a place where let's form more assets. Let's form the cross-chain connections that are needed for the liquidity and the transaction of that to happen. And let's solve the compliance problems related to making sure that those transactions can happen. And as those transactions begin to happen on CCIP, and they begin to be driven by Chainlink data and Chainlink identity related services and Chainlink risk management verification, you end up in a world where Chainlink becomes not only the transactional standard and data standard of DeFi, but it's the transactional and data standard of capital markets. And then once again, our goal is to be the transactional standard in both places, so that when they do go to transact with each other, that it's a seamless transition. It's not that one group is on one system, another group's on another system, and them both being on the same standard actually benefits everybody, because they both have to do much less work.
What impressions, like Dubai in general as a digital asset hub, gave you? And secondly, will we see more of Chainlink team settling up in Dubai in the future? And where do you see, will you establish your stronger presence in the region?
Yeah, so I have been very positive on my experience here in Dubai and Abu Dhabi at this point. So I feel very welcomed by the people here, even at the most senior levels. And I think there's a real appetite for our industry to form a digital asset hub dynamic here. So in meeting with some of the most senior people, I found that they are not skeptical. They are positive and eager to see the UAE become a hub for digital assets at the most senior levels. And that has been very positive. That's been a very, very positive dynamic. I found a number of people, like Dr. Marwan, who was on a panel with, who are very educated and very insightful about not only where the industry has come from technically, not only where it is today, but also where it is going in terms of its ability to transact, form new assets. So I've actually found a lot of people that are very informed and educated, not only about how we got here, where we are, but also where the industry is going. And so that's also been a very, very positive thing. Generally speaking, I think right now, Dubai is and Abu Dhabi, the Emirates, those two places, Dubai and Abu Dhabi for me are just kind of the Emirates. I compare the Emirates to Hong Kong and Singapore. So the Emirates, Hong Kong, and Singapore are the three large digital asset hubs that are driven by a kind of underlying fundamental decision to form their future as a hub. So the Emirates, Singapore, Hong Kong, their domestic economy is not like super diversified. And their goal is, in many cases, to be a hub. A hub for shipping, a hub for finance, and in this case, a hub for digital assets. And that is a very different commitment from a country that kind of just has a financial system that they kind of use in their country, but they're not seeking to become the global hub for finance, the global hub for shipping. So the Emirates, Singapore, and Hong Kong are actually defining themselves as hubs. And so every new technology, every new opportunity that comes down the road, their leaders, the organizations here at the government level, the associations are all in Congress together with each other asking themselves, how do we make this place into the hub of this thing? And so there's this kind of goal. So they have this very big difference from the rest of the world. And I feel that the Emirates, Dubai, and Abu Dhabi have made it a goal to be a core place where digital asset teams, smaller teams, Web3 teams, kind of mid-market fintechs, and also banks participate in the digital asset economy. We're going to be building our presence out here. We've already hired people as Chainlink Labs here in the Emirates, and we're going to be hiring more, and we're going to be building our presence in the Emirates and actually generally in the Middle East, in addition to the large presence we have in Asia.
Amazing.
So I think the Middle East and Asia are possibly the two biggest markets for crypto, Web3, and digital assets over the next few years, depending how the rest of the world evolves. But we're definitely building a presence in Asia and the Middle East.
So what will be the top priorities for Chainlink in the next, let's say, 3 years? Focusing again on Asian, Middle Eastern market, and what else?
So really the security and reliability of the Chainlink network is generally always a top priority, because I don't think people will put value into a system that isn't secure and reliable. And the security and reliability of Chainlink is something that powers DeFi, powers real-world assets, powers blockchain gaming, powers a lot of different use cases, and allows them to function from the point of view that not only is the chain reliable, but the things connected to the chain are reliable. Therefore, people feel comfortable putting their value into those systems. So I think the security and reliability of Chainlink should always be the top priority, because that's the pattern of systems that have properly secured value in the past. Whether that's Swift or AWS or any other set of systems, they have been secure and reliable over time, right? And that's really going to be always the top priority. I would say the second priority is to make sure that Chainlink is continuing to be a standard in the Web3 ecosystem, that it is the way that data is transmitted into and out of blockchains, the way that data and value is transmitted across chains, the way that new capabilities come into the public chain sphere, like identity, or that we have a system called Deco, which I think is going to be quite useful for generating high quality identity proofs for things like regulated DeFi, which I think will grow in the coming years. So it's about being a standard in the Web3 public blockchain world, which Chainlink is a standard there already in many ways, and getting the best developers, the best security researchers, the best academics to really focus on Chainlink and make it more secure, to make it the open source standard that has had the most security, the most eyes on the security, the most people using it as a standard for Web3, basically asset formation, transactions across chains, and other kind of additional features like random numbers, automations, functions computations, all those types of things. And then I would say the third priority is heavily exploring and capturing the capital markets, because that is still in the early to mid stages of growing. But capturing those markets to create the same standard in those markets is very important. So I think Chainlink should be secure and reliable. It should be the standard for asset formation, transaction of assets, identity into assets, all of these key inputs and dynamics around how on-chain DeFi, on-chain RWAs, all these on-chain dApps work. then it should be that same standard in the capital markets for the same reasons of security, the quality of the data, the quality of the cross-chain connection. There will be an additional, like 80% of what's built in public chains will be transferable to capital markets. There'll be an additional 20% of new requirements from capital markets. A lot of that will be identity, compliance, and others. And then if Chainlink over the next few years can achieve those three things, can be a secure, reliable standard and framework and open source community that creates real security, and people want to put their value into systems backed by Chainlink systems and feeds, and we take that seriously, and we maintain that high standard as a community, then and we are the standard for how transactions and assets are formed and work across chains in the public chain world. And it also becomes the standard for how assets and transactions are formed and work in the private chain capital markets world. Then at that point, all that Chainlink will really need to do is to continue those three dynamics until, and as the value in both of those markets grows. And then my personal view is that as those two markets begin to interact with each other, then the importance of a global standard for how assets are formed, understood, how things are proven about them in the case of proof of reserves, how identity interacts with those assets, how those assets move across all those chains. As those two worlds of the public chain world and the private chain world interact with each other, then our industry, in my opinion, will really see that kind of explosion of usage and inflection point. And that's the explosion of usage and inflection point that I feel Chainlink is being positioned to be at the very epicenter of. And I feel that inflection point is inevitable. The goal for me, for the other people working on Chainlink, for the community, in my opinion, should be to get in the position that when that inflection point happens, that inevitable inflection point, Chainlink is in a position to generate those assets, move those assets, allow those assets to transact in a compliant way, allow more advanced assets and contracts to come into existence across chains, across use cases. And then Chainlink can be kind of the crossroads of the world, right? It can be the way that things go on chain. It can be the way things go across chains. It can be the way that things going on chain and across chains interact with the rest of the world. And this is the kind of pattern that we're building around. And even in our work with Swift in the recent report, where we worked on allowing Swift messages to execute blockchain transactions, it was done in a way where it wasn't just about private chain to private chain transactions. It was actually about three sets of transactions. It was about public to public, public to private, and private to private. So even in our work with the biggest financial market infrastructures, we're in the process of setting it up in a way that it will be at this intersection of the capital markets and the public chain world. And that intersection, I think, really will be the crossroads of the world if all of this value and all of this activity goes on chain in the way that we expect.
Thank you. Thank you so much, Sergey. Right now, we move to our rapid fire questions. Stay tuned with Encrypted. Rapid fire questions. Okay, Sergey, I'll ask you quick questions. You can also answer quickly and we move on. Are you ready?
I'm ready.
Okay, if you would have to explain Chainlink to a child, how would you do this in one sentence?
When someone promises you candy and they don't give it to you, Chainlink would make sure they do.
Okay. What would you say to people who call you Satoshi Nakamoto?
I would say I'm not Satoshi Nakamoto. I'm not.
Okay. Name 5 qualities that you believe a real entrepreneur should have.
Hardworking, persistent, honest, competitive, eager to win.
Okay. What would you never do while building a company?
When building a company, I wouldn't make a very large amount of new personal commitments because building a company takes a huge amount of time.
If Chainlink were a person, how would you describe its personality in one word?
Reliable.
Finish the sentence. My business philosophy is?
Winning.
How often do you practice your keynote speech before going on a stage?
If it's completely new, then I spend hours or the day before practicing quite a bit. If it's the same content with some new additions, then I don't spend any time.
The next big trend to follow?
Real world assets.
What is your personal formula for success?
Work hard, be right, work with great people.
The biggest misconception people have about Chainlink.
That it's just about data.
What is the proudest moment in your blockchain career?
My proudest moments are actually when there are various reliability and security issues in the blockchain space. Like, Ethereum gas goes to 2,500, or there's flash loan attacks on DEX prices. And we've designed Chainlink in a way with the community that is preemptively resistant to those problems. So the proudest moments for me are when the design decisions that were made preemptively saw a problem, like flash loan attacks have been completely resisted by Chainlink from the beginning. Various reliability issues around reorgs, around congestion have been preemptively solved by Chainlink from the beginning. And solving those issues preemptively is something that I would say I'm the most proud of, because it requires you to really understand what's going on, foresee an issue that the infrastructure and the apps connected to it are going to have, and form key design decisions to avoid those issues. I would say when the design decisions of Chainlink end up being right in ways that other systems aren't, because we made a fundamentally different principled design decision that creates security and reliability, and the Chainlink system operates and other systems don't operate, that makes the Chainlink system consistently valuable, because people know that it will operate, it will be secure, it will be reliable.
And Sergey, Dubai for you is associated with?
Money.
Amazing. Today we had Sergey Nazarov, co-founder of Chainlink. Really happy to have you. Thank you so much. Thank you everyone for watching, and see you next time. From the gleaming skyscrapers of Dubai to the innovation hubs of the Middle East and beyond, Encrypted brings you thought-provoking discussions, exclusive insights, and stories of innovation that will leave you inspired.